Welcome back. Now, stronger export and domestic sales supported Exxaro's first half earnings. The miner says it delivered a stable performance amid shifting macroeconomic pressures and improved volumes and higher price realizations in its coal business helped cushion weaker commodity prices. CEO Ben Magara joins us now to dig into those numbers. Thank you so much for your time, Ben. And I actually want to start off with that because, I mean, this has been a trend in, the coal landscape that companies are seeing lower commodity prices and things aren't really looking as good as they looked, for example, in 2022, 2023. So let's actually start off with that strong performance in the coal business. What story is the price and demand profile for Exxaro coal telling?
Zinati, thanks for having me. What is really telling on our results is starting off with, while our revenues are up by 8% to 26.6 billion, our EBITDA is up by 10%, which is higher than, in terms of increase, than the revenue line, which means there has been some very decisive cost containment programs. So we tasked our teams and all the operations to look at costs and improve efficiencies, maximize volumes to make sure we reduce our unit costs. And we managed to keep half on half. If you compare with the second half of 2024 to this half year, we actually delivered flat unit costs, which really translate to a much better EBITDA than we would have had we not driven the cost containment programs. So the cost arrangements, we are seeing benefits in that cost improvement, and that has really improved our benefits. So the expectations of the market would possibly have been that our cost improvements would not be as drastic, and hence they have smiled with their share price.
Yeah, and indeed we have seen that. I think I saw at some point it was up about 10%. And just on that, I mean, of course, I do understand that the costs play a really, really big role in terms of you then realizing the benefits from your prices. But how is demand in that coal sector shaping up for Exxaro coal?
Exxaro coal is quite unique in the sense that we do have GG, the Grootegeluk mine in Limpopo, and that mine, the export coal from that mine is very advantaged in the sense that it's much lower sulfur, and you can therefore blend it with our coals in Mpumalanga, which tend to have higher sulfur, where our competitors tend to play. So we are able to blend those coals and provide a much better and consistent quality to our customers. The Japanese customers are very interested in consistent supply of good quality coal, and we are able to do that with much lower sulfur than the Witbank fields, the Mpumalanga fields. So that really is a great advantage for what you see at Exxaro. However, even our Mpumalanga operations have continued to improve. So we saw India growth. We saw India slowing down a little bit, but Japan is coming through. The other Asians have also come through. We again, in our drive in Africa, we have also seen improvements in offtakes and customers asking for our coal in Africa, Morocco, you name it. So our sales and marketing teams are flat out looking for opportunities to grow the South African customer demand. And we're very pleased with the progress we are seeing there. And because of all that, we are getting a price realization of about 90% compared to the benchmark prices of API4 at Richards Bay, which gives us, again, an advantage to most industry numbers, possibly playing around 85, 90%. So a 6% improvement in your price realization can make the margins we have made, which is 28% margins that we've made from our operating business in coal.
All right. Well, let's go into the strategy movements that we are seeing from Exxaro as well. I want to start off with Leupan. There is a turnaround happening there. What is Exxaro putting at the forefront of that plan? And are there any timelines that you are working with in terms of reviving it to sustainable levels?
Yes, indeed. I'm very pleased with the progress we're making at Leupan. First, it was to redesign the mine. It had many pits. We redesigned the mine to end up with one long pit, which actually improves your operating efficiencies, and your haul roads become straight to the plant, and you can improve your performance and your efficiencies that way. So this long pit now is about 900 meters. We expect to get it to about 1.1 kilometers, which really emphasizes the optimization of the pit. The product mix, we've got 2-3 plants operating there. So we are able to also to optimize our product mix before we can export or sell to the domestic market. So technically, we have done the best we can to make sure that this mine performs and turns around as we expect. Now we announced, as you would be aware, our Section 189 process, because the Leupan has been making losses for a few years now. This whole Section 189 formal process has already produced an agreement with the unions, with our employee representatives, and with all the employees. So it's now taking off. We have 200 employees that that are affected. As a whole, I'm really happy that Exxaro Group has more employment opportunities than the 200 we want to redeploy from Leupan, which means we can reskill them and move them to those operations. But there may be a few who choose that their families are tied up around Delmas and Leupan, who are not able to move, and we've offered them a voluntary separation package. So we're going through a process now for them to make a choice of where they would rather be. But in the end, we are managing to save jobs, but also to turn around Leupan. We are negotiating and we are discussing with Transnet, Michelle and her team, to see if we can move more trucks, more trains into Leupan. And I am very optimistic that we should find an answer to that. If we can improve railing from Leupan and do the turnaround work we have done, Leupan will be at least break even and making a profit at the current levels of coal prices.
Well, let's drill into your diversification strategy. Of course, you've entered into an acquisition transaction for manganese assets. How much room for value unlock does that provide for the business?
The real synergies with the capability we have in coal is manganese mining is as much like a bulk mining technology. So the mining methods, the competencies we have at Exxaro are transferable between coal and manganese. So that's the first kind of technical synergies that we can get out of it. Obviously, we are very involved. The manganese line, in terms of Transnet, has been working very well or flat out. It's an area we know very well, so we can continue to improve on that. So we will use our technical capabilities to optimize value for all the joint venture partners we have in that area. And we're looking forward to this because we know we can make an improved difference in that area, and it will benefit all the stakeholders involved.
I mean, in Exxaro's...
And the transaction, as we speak now, Zinati, is that we still expect, as we announced in May, to close the transaction by the end of the first quarter next year, 2026. There are clear CPs of regulatory requirements. We've filed with the Competition Commission in South Africa. We are well engaged with the DMR, our department for Section 11 in the MPRDA for the transfer of the mining rights. And all is going well. All the shareholders of Zimbabwe Holdings and OMH have approved the transaction.
Yeah. And of course, as journalists, we're always hungry for new information. What is next? So in Exxaro's effort to be fit for the future, the question is then, what level of diversification acceleration can we expect from Exxaro?
We would still be interested to get into copper.
Okay.
Our priority right now is to close the transaction and integrate it and optimize the manganese field. But we would still be interested in copper. I don't think it would be a going concern copper mine because those mature mines are quite expensive. We think we can come in and at more advanced exploration projects where we can then help with going up the value curve. So we have actually said to the market and to our investors, post the manganese transaction, we do not intend to build the cash buffer that we have been having. Therefore, we are looking at our capital allocation framework in order to return more returns to our shareholders within the risk appetite of the company.
All right. Well, we do have to wrap up the conversation there, Ben. Thank you so much for your time, and looking forward to chatting to you in about 6 months' time. Do enjoy your day. That was Ben Magara, CEO of Exxaro.